Good afternoon and welcome to Join the Dots Weekend Edition. In the first 2 weeks of this service, I'm really trying to get over to you that I am doing an enormous amount of research. I also want to explain my background just very quickly. First of all, I was an international banker. I was with Credit Suisse. What I then did was I saw the ERM collapse in 92, in late 91, saw it, played it, got it right. Then in 2008, or rather 2007, I saw and said there would be a global financial crisis in June 07, and it came in 08. Okay. Then in 11, I was sitting at Meydan Racecourse with Jeff Randall. Meydan Racecourse is in Dubai, for those who don't know it. And I was sitting with Jeff Randall of Sky and the Daily Telegraph. And I said to him, Jeff, do you realise there's going to be a Eurobond crisis? And he said, what do you mean? I said, well, they can't attack the currency because they're all one currency, the euro. They can attack the individual country bonds. That's what they did. I have an experience of seeing things in crisis. So for 10 years, pretty useless really, because what's happening? Nothing. Everything's just chunting along. But when it comes to a crisis, I sense it, I feel it, I see it, and I explain it. And that's what I'm doing on this service. Okay, so I've given you an awful lot of data on China. There's more coming out now, and even today the Chinese government have announced that it's bringing forward some very significant bond issues, huge amounts, 50-year bonds. Who wants a 50-year Chinese government bond, honestly? Well, probably the Chinese public will buy it, or maybe the central bank. The Fed's going down that path, isn't it? Just like Japan has the last 40 years. The Fed is going to have to buy its own bonds soon, because no one else wants it, do they? No one wants the dollar, no one wants the bonds. But it's the reserve asset. So what are we going to do? Well, China, as I say, is desperate now. It's desperate. Please understand that. So many people don't want to see that. They don't want to feel it. They don't want to hear it. It's just true. Okay? We don't like the truth sometimes, but the truth is the truth. I take the truth, join the dots, tell you what's happening. You make your decisions. So now we look at America. Okay? I've given you Chinese problem there. I am talking about a property price collapse in the American real estate market, and very, very few people will accept that. Oh, they're going to drop rates. Oh, it'll be fine. No, a property market is a tanker, not a speedboat. It goes one way until it turns, and when it turns, it goes that way until it turns again. Okay, so when it crashes or when it falls like in 07, 08, 09, you can't stop it because no one will buy when the market is falling. What's the expression in markets? Never catch a falling knife. Let it hit the ground, pick it up, much safer. So you let property hit the bottom before you buy. So once it starts falling, you can't stop it. What makes property fall? Well, it could be higher interest rates, yes, but we've been around 7 on the 30-year mortgage for quite a time. What else makes it fall? Loss of jobs. Jobs, jobs, jobs. They're going in China. They're going in America now. And today, I saw a site with Daniela DiMartino Booth, who used to be one of the Fed people, a person at the Boston Fed, I think it was. And she's warning of what are called warn notices. So these are companies that have to give their employees, who they might lay off, a 60 or 90-day notice, depending on the state involved. She said, we are seeing record numbers of warn notices going back to, yes, you guessed it, 2007 to 2009. You're going to hear that date time and time and time again, because that's where we are. Only this time, we've got a reserve currency problem, haven't we? So if 07, 08 happens, and you haven't got a reserve currency, you've got a bigger problem on top of the problem in the economy. Warn notices are incredibly important because this destroys confidence. And I've talked about confidence with you in China. Confidence is disappearing, it's oozing out. It's oozing out of employees, it's oozing out of companies. FedEx I talked about, okay? FedEx, the bellwether of the US economy. Everything moves through FedEx. It's going down. Why? 24% down in the year. Why? Because there's not as much business. And companies recognising that, need to lay off staff, and staff recognising that need to cut their costs, don't they? So buying a dearer house, no way. Maintaining your own house, problems if you've got a high mortgage or a high level of gearing on your property. So what we're seeing is all the warning signs that you should be listening to. Okay. Now I'll take you to Zero Hedge today as well. Zero Hedge, because we've got to join these dots. We'll say, okay, Mike, you've told us this, you've told us that, employment's going, government are issuing bonds, government haven't got a credible currency anymore. What's the answer? Well, as you know, we've talked about precious metals and we've talked about crypto. And I think we're heading for a new financial system, and it could be two systems. It could be one based on precious metals in the East and one based on crypto in the West. We'll see. I don't know that for sure yet. I'm trying to join those dots for you, but I'm giving you the background so you can see that there is a need for a new system or two. There's a need, not a wouldn't it be nice? There is a need. And when you accept that need, then you start to look for answers. And I saw that Mr. Greyerz, and I can never remember how to spell his name, Greyerz, yes, that's right, von Greyerz, from Gold Switzerland site, is talking about how gold should be the base of your wealth pyramid. Ah, pyramid, you say. Exeter's pyramid. Turn it upside down. We start with equities and property and other solid assets here, but when it all goes into crisis, we turn it upside down, and the speculative gold at the very top is now the base at the very bottom. And that's what Van Greyerz sees, and I agree with him. I agree. Gold should be a significant part of a safe investment portfolio looking forwards. From here, looking forwards. Zero Hedge today, most of you will know Zero Hedge, I'm sure. Have a look at Zero Hedge today. They're talking about gold not having reacted like it has since 1929. Well, there's another date for you. 1929, the Great Depression, the Wall Street crash. But be careful, traders, please be careful, because this beautiful bill and all the hullabaloo and all the excitement could see the market rise 5 to 10% before we see that crash that brings us into the depression. I think a depression is coming, and I should imagine you've picked that up from all my truths that I've told you and then joining the dots. Okay, so we're going into next week with some really serious information now on the future. Okay, jobs are going in China, in America, they're going. People won't have the money. The middle class are being ripped apart with job losses, with inflation, with a weakening currency, tariff prices coming in. The companies won't be able to pass those tariffs on because people haven't got the money. The companies will lose margins, their stock prices will fall. It's all there. You've just got to join the dots. So please join me on this journey. Please like and subscribe. It's really important we get these numbers up and we get this information out to more and more people so they understand what's coming. Thank you very much for watching, and I'll see you tomorrow.